Hey there. Welcome to my YouTube channel. Today we'll discuss if Netflix is worth investing in. Netflix used to be the stock everyone wanted to own. It disrupted cable, dominated streaming, and rewarded long-term investors massively. But now we're in the first quarter of 2026, competition is tougher, growth is slowing, and investors are asking an important question. Is Netflix stock still worth owning today, or has its best days already passed? In this video, we're going deep into Netflix stock, its financial performance, subscriber growth, advertising business, risks, and what all of this means for investors going forward. Make sure you watch till the end, because I'll also share who Netflix stock actually makes sense for in 2026, and who should stay away. Quick disclaimer, this video is for educational purposes only. This is not financial advice. Always do your own research before investing. Let's start with the big picture. Netflix today is no longer just a streaming app. It's a global entertainment platform competing with Disney, Amazon, Apple, traditional TV networks, and even social media for your attention. In the span of just over 2 decades, Netflix has transformed from a DVD by-mail service into one of the most influential entertainment companies in the world. Today, it is no longer accurate to describe Netflix simply as a streaming app. Instead, it has become a global entertainment platform, competing not only with traditional television networks but also with media giants like Disney, Amazon, and Apple, as well as newer rivals such as TikTok and YouTube. The company's evolution reflects both the changing habits of audiences and the shifting priorities of investors. Netflix's success rests on 3 interconnected pillars. Subscription revenue. The foundation of Netflix's business remains its subscription model. With hundreds of millions of paying members worldwide, recurring monthly fees provide a stable and predictable stream of income. This model has allowed Netflix to scale rapidly and reinvest in content creation. Advertising revenue. More recently, Netflix introduced an ad-supported tier. This move acknowledges the reality that not all consumers are willing or able to pay premium subscription prices. By offering a lower-cost option supported by advertising, Netflix has opened the door to new audiences while diversifying its revenue streams. Global content production and licensing. Netflix invests billions annually in original programming, ranging from Hollywood blockbusters to local language series produced in markets such as Korea, India, and Spain. This global approach not only broadens its appeal but also creates cultural phenomena that transcend borders, think Squid Game or Money Heist. At the same time, licensing deals ensure that Netflix maintains a library of familiar titles to keep subscribers engaged. Now, how strong is Netflix really? Netflix's stock, NFLX, enjoyed a powerful run in the early 2020s, fueled by rapid subscriber growth, global expansion, and cultural dominance. Investors rewarded the company for its ability to disrupt traditional television and become the face of streaming. However, by 2026, the narrative shifted. The market began to recognize that streaming is no longer a novelty, it's a crowded, mature industry. As a result, Netflix's share price became more volatile, reflecting both optimism about its scale and caution about its future. In earlier years, investors were willing to overlook high spending and thin margins as long as subscriber numbers kept climbing. Today, the focus is different. 1. Profits. Investors want to see consistent earnings, not just growth. Netflix must prove it can turn its massive revenue base into sustainable profitability. 2. Cash flow. Content creation is expensive. Investors now scrutinize whether Netflix generates enough free cash flow to fund new shows and films without relying heavily on debt. 3. Sustainability. The question is whether Netflix's model, subscriptions plus advertising, can withstand competition from Disney, Amazon, Apple, and even TikTok. Sustainability means balancing growth with financial discipline. Netflix has hundreds of millions of subscribers globally. Growth in developed markets like North America and Europe is slowing. For years, Netflix's success was measured almost entirely by how many new subscribers it could add each quarter. That made sense in the early days of streaming, when the market was still expanding and Netflix was racing to establish dominance. But by 2026, the streaming market has matured. Most households that want streaming already have it, and competition from Disney+, Amazon Prime Video, Apple TV+, and others means explosive subscriber growth is harder to achieve. Simply chasing raw subscriber numbers is no longer the most effective way to create shareholder value. Netflix doesn't need to be the fastest-growing streaming service anymore. What it needs is to be the most profitable and resilient. By raising revenue per user, Netflix can stabilize its business, reassure investors, and continue funding the global content machine that keeps audiences engaged. What type of investor should own Netflix? 1. Long-term investors. 2. Investors who believe in streaming's future. 3. Those comfortable with volatility. So what's the verdict on Netflix stock in Q1 2026? For long-term investors, Netflix can still play a meaningful role in a diversified portfolio. Its global scale, brand recognition, and ability to produce cultural phenomena give it staying power. Pullbacks in the stock, periods when the share price dips due to market volatility or short-term concerns, may present opportunities to buy at more attractive valuations. In that sense, Netflix remains a company with potential for long-term capital appreciation. Netflix is evolving from a pure growth story into a company judged by its ability to generate profits and cash flow. For investors, this means it can still be worthwhile, but it's no longer a stock you buy once and ignore. It requires vigilance, patience, and a willingness to reassess as the streaming wars and attention economy continue to evolve. What do you think about Netflix stock in 2026? Are you bullish, bearish, or staying on the sidelines? Drop your thoughts in the comments, smash the like button if this helped you, and subscribe for more stock and money content every week. Thanks for watching, see you in the next one.